All right, let's jump right in. Today's deep dive is going to be a fascinating one, even for folks like you who, well, you know their way around the financial world.
Yeah.
We're tackling the GameStop sneeze, January 2021. It was a wild ride, and we're going to go beyond the memes and headlines. Trust me, there's some intricate market mechanics at play that even the most seasoned experts might find thought-provoking.
Yeah, it really exposed some vulnerabilities in the system, let's say, and the speed at which everything unfolded. It's like a microcosm of how social media can impact the markets in a way that we haven't really seen before.
Right, exactly. We've got a ton of detailed timelines and analyses to dig into here. We're going to dissect how it all went down step by step. So rewind to January 2021. GameStop, the video game retailer, they were heavily shorted by hedge funds, essentially a bet that the stock price was going to, plummet. But over on Reddit, the WallStreetBets subreddit, retail investors saw they saw a different opportunity.
And that's where things start to get interesting. It wasn't just, random chance or a meme-fueled frenzy. On January 11th, Ryan Cohen joined GameStop's board. Now, Cohen's the founder of Chewy. He had a reputation for successful business turnarounds, and this move signaled to some that GameStop might actually have a future.
So there was some actual substance to it. It wasn't just a meme stock from the start.
Exactly. This is crucial for understanding the whole picture. Cohen's arrival attracted more than just the meme stock crowd. And by January 15th, the stock price had climbed to $40. But here's the thing. The short interest was already over 140%.
Okay, whoa. Back up for a sec. Over 140%. I mean, I know short selling, but that's crazy high.
It is, yeah. It means more shares were being shorted than actually existed, which, is a recipe for a potential squeeze.
Yeah, let's break that down a bit, even for the experienced folks out there. I think a refresher on short selling, especially when we're talking about levels like this.
Sure, imagine a rare collectible, something with a limited supply, say only 100 copies exist. Now, imagine 140 people borrow these collectibles, promising to return them later, betting they can buy them back cheaper down the line. That's essentially short selling. But if the price starts going up, well, those 140 people are in trouble. They have to buy back those collectibles, even at a loss, to cover their promise. And that rush to buy back drives the price up even further. And that's the squeeze.
Got it. So in this case, with GameStop, we've got a whole lot of these borrowers in a pretty precarious position.
Precisely. And things really start heating up over the weekend of January 22nd. GameStop closes at $65 that Friday, and the WallStreetBets community is buzzing. They're recognizing the potential for this massive short squeeze.
This is when we start seeing the diamond hands mentality emerge, right?
Exactly. It becomes this symbol of defiance, holding onto the shares no matter what, a direct challenge to the hedge funds. It's this mix of financial strategy and social movement all rolled into one.
So we're heading into the week of January 25th with a powder keg ready to explode.
And explode it does. Monday morning, GME opens at over $96. That's a jump of over 50% from Friday's close. The pressure's on.
And I imagine things start to get even wilder from there.
Oh, yeah. Monday sees GME hitting $159 during the day, but it closes at $76.79. It's a roller coaster. And it's not just about short covering. Retail investors, fueled by FOMO, are piling in, pushing the price even higher.
So it's becoming more than just a financial play. There's this social momentum, this feeling of, almost like collective action.
Absolutely. And by Tuesday, January 26th, we see some big players stepping in. Melvin Capital, one of the hedge funds heavily shorting GameStop, starts taking serious losses.
So the stakes are getting even higher now.
Oh, yeah. By midday Tuesday, Melvin Capital's losses are so bad that Citadel and Point72, two other massive hedge funds, step in with a $2 billion bailout. Just think about the scale of that.
Wow. So this relatively small group of retail investors, they kind of inadvertently trigger a financial earthquake.
And that's just the beginning. Remember, we're aiming for that expert-level understanding. What happens next is where it goes from just a financial squeeze to something much, much bigger.
Okay, I'm hooked. What happens Wednesday?
Wednesday, January 27th, is when things really go crazy. Pre-market trading starts, and GameStop is already trading at over $300. That's almost 300% higher than Tuesday's close.
That's insane.
Yeah.
What was the vibe like on WallStreetBets at this point?
It was pure euphoria, mixed with the sense of, vindication. People were posting screenshots of their gains. Memes are flying everywhere. It was like they had conquered Wall Street.
So it's about more than just making money now. It's become this battle, like David versus Goliath, playing out in real time.
Exactly. And it all leads up to Thursday, January 28th. Pre-market, GameStop hits an all-time high of $513.12. But then, Right as things are peaking, a controversial decision changes everything.
This is where Robinhood comes in, right? With those restrictions they imposed.
Right, around 9:30 a.m. Eastern Time, Robinhood, along with a bunch of other brokerages, suddenly restrict buying of GameStop. You could only sell, not buy. It was chaos.
I can only imagine. What happened to the price?
It tanks. GameStop drops to $112 intraday. Accusations of market manipulation are flying everywhere. Everyone's outraged, from politicians like AOC and Ted Cruz to, everyday investors.
So what's the final fallout from this crazy day?
It ends with GameStop closing at $193.60. It's still up massively from where it started, but the damage is done, trust is broken, and this feeling of anger and betrayal, it lingers. And that sets the stage for what happens next.
All right, well, we're going to have to leave it there for now. But don't worry, we'll be back soon to dissect the aftermath of the sneeze and its lasting impact on the market. Trust me, you won't want to miss it.
So yeah, that Thursday, January 28th, that was a turning point for sure. The restrictions really changed the game. Even though the price, eventually came back down, the sneeze had kind of unleashed these forces that weren't just going to disappear.
Right, but I mean, wasn't it essentially over at that point? Like, Robinhood and the others had effectively shut down that buying frenzy, right?
Right.
Did anything really happen after that?
Well, not exactly. The restrictions did ease up a bit on that Friday, January 29th, but, the frenzy had cooled down. GameStop was still pretty volatile, closed at $325 that day. But I think the most interesting thing was the solidification of that Ocho DL mentality.
ODL, right. Hold on for dear life. It definitely became a rallying cry, a symbol of that commitment to the cause. But what were they holding on for exactly? Did they think the price was just magically going to shoot back up to those pre-restriction levels?
It's a bit more nuanced than that. OTDL wasn't just about, hoping for a quick rebound. It represented this refusal to give in, this pushback against the perceived manipulation of the market.
So they weren't just going to, give up and walk away.
Yeah. No way. And this is where the sneeze shows its real lasting impact. It wasn't just this flash in the pan. It exposed these vulnerabilities, right? And these retail investors, they were determined to keep the pressure on.
Yeah, I remember all that talk about those congressional hearings after all this.
Yeah.
Did anything actually come of those?
Oh, yeah, definitely. In February 2021, Congress held those hearings to try and, make sense of what happened during those crazy days in January.
Who testified at those, by the way? Were any big names involved?
Oh, yeah, some key figures for sure. You had Vlad Tenev, the CEO of Robinhood. He had to explain their decision to restrict trading. And then Ken Griffin, the head of Citadel, remember the hedge fund that bailed out Melvin Capital, he testified too. And even Keith Gill, Roaring Kitty or Deep Fucking Value from those YouTube videos about GameStop, he appeared before Congress.
Wait, seriously? The guy from the YouTube videos was testifying before Congress?
Yeah.
That's wild.
It was a pretty surreal moment, but it brought the whole GameStop saga into the spotlight, Suddenly, everyone was talking about hedge funds, short selling, and, the power of these retail investors.
So did anything actually change as a result of all this? Were there any new rules or regulations?
That's a tough one. There were definitely calls for stricter regulations on short selling and more transparency for sure. But the actual changes have been, pretty slow. Some people argue that the system's still fundamentally the same.
So it was more of a wake-up call than a revolution.
Yeah, I think that's a good way to put it. The sneeze definitely forced everyone to pay attention, but whether it led to any lasting systemic change, well, that's still up for debate.
Makes sense. It sounds like the impact was less about specific rule changes and more about a shift in awareness.
Exactly. It showed everyone, especially those big financial institutions, that retail investors, when they act together, they can be a real force to be reckoned with. And this is where we start to see the bigger implications. It wasn't just about GameStop, It was a symptom of these larger trends that were already happening.
Okay, now I'm really intrigued. Tell me more about these larger trends. What were some of the things that contributed to all this?
Well, for starters, GameStop wasn't the only meme stock rallying,
Yeah.
AMC, BlackBerry, Nokia. They all saw those huge price surges driven by retail investors.
So it was part of a bigger phenomena. Was there something connecting all these events?
Oh, absolutely. The sneeze really fueled this idea that retail investors could band together. They could target these heavily shorted stocks using social media as their platform. It was a new kind of activism, I guess you could say.
And wasn't options trading a big part of this too? Didn't we see that, what was it called, a gamma squeeze?
Exactly. The mechanics of a gamma squeeze, fueled by those call options, really amplified the sneeze. So as the stock price goes up, those market makers who sold those options, they're forced to buy more and more stock to hedge their positions. And that buying pressure creates this feedback loop, driving the price up even faster.
So options trading basically threw gasoline on the fire.
You could say that, yeah. It definitely contributed to the volatility.
Okay, so we have these meme stocks, options trading, amplifying things.
Yeah.
But you mentioned there were even deeper issues at play.
Right. The sneeze really highlighted some systemic issues in the market, things that a lot of people weren't even aware of. Like take Robinhood, for example. They actually faced a liquidity crisis because of all the volatility.
A liquidity crisis, what does that even mean in this context? How can a brokerage, run out of money?
It means they didn't have enough cash on hand to cover all the trades that were happening. They had to scramble to raise billions of dollars just to, keep operating. It really showed how unprepared some parts of the system were for this kind of retail investor-driven event.
So it wasn't that Robinhood was trying to, protect the hedge funds or something?
Right. They were genuinely caught off guard. It wasn't just about individual actors. It was the system itself. And it goes even deeper. The DTCC, the Depository Trust and Clearing Corporation, which is basically the backbone of the U.S. stock market, they demanded more collateral from those brokerages because of all the volatility. That put even more pressure on Robinhood to restrict trading.
So it was this, cascading effect.
Exactly. And this is where we get into some of the more controversial aspects. All the talk about dark pools, naked short selling, synthetic shares.
Okay, yeah, those are some terms I've heard thrown around, but a refresher would be helpful.
Yeah.
What are those things, and how do they play into all this?
Dark pools are basically private exchanges. Large institutional investors use them to trade stocks without affecting the public market price. Some people believe a lot of the trading in GameStop was happening in these dark pools to suppress the price.
So it's like a hidden market?
Kind of, yeah. And then naked short selling, that's the illegal practice of shorting a stock without actually borrowing the shares first. So basically, creating shares out of thin air, which can artificially inflate the supply and drive the price down.
So potentially manipulating the market.
That's the idea. And synthetic shares are a bit more complex, but they're essentially derivative contracts that they mimic the performance of a stock without actually owning it. Those can be used for manipulation, too, if they're not regulated properly.
Okay, so dark pools, naked short selling, synthetic shares, all these things that could be used to game the system.
Right, and they were at the center of all those conspiracy theories surrounding the sneeze. A lot of those retail investors felt like they were being manipulated.
Were any of those theories proven?
Well, the SEC, the Securities and Exchange Commission, they launched investigations. But the findings weren't totally conclusive. There's still debate about what really went down.
So a lot of unanswered questions.
Definitely. And that's part of what makes the GameStop sneeze so interesting, even all these years later. It wasn't just a stock market event. It was this cultural moment that exposed a lot of anxieties about the financial system.
So it's about more than just, winning or losing money. It's about fairness, transparency, who's really in control.
Exactly. And it's crucial to remember that the sneeze was just a symptom of a much bigger conversation, a conversation about the role of retail investors, the impact of technology, the need for a fairer system.
I see how this event, even though it seemed isolated at the time, connected to these bigger themes.
Just wow.
Yeah, this whole thing that started with a bunch of people on Reddit. And it ends up sparking this huge debate about the whole structure of the market. You mentioned it was a symptom of these bigger trends. Did anything actually come out of the GameStop sneeze, or was it all just talk?
Well, one interesting development was the rise of the direct registration system, or DRS.
DRS, yeah, I remember hearing about that. What was that all about again?
It's basically a way for investors to register their shares directly with the company. They bypass brokers and clearinghouses like the DTCC.
So cutting out those middlemen, what's the advantage of doing that?
Well, the people who support DRS, they argue that it gives investors more control over their shares and makes it harder for short sellers to manipulate the market.
How so?
The idea is that if enough shares are directly registered, it limits the number that are available for borrowing and shorting.
So it's a way for those retail investors to, level the playing field.
Exactly. It's about taking back that power from the institutions.
It's kind of amazing how this event, this sneeze, it started as this, isolated incident. And it ended up inspiring this whole movement for change in the market.
It shows the power of collective action, especially with social media.
So as we wrap up this deep dive into the GameStop sneeze, What are the big takeaways for expert level listeners like ourselves?
I think the main lesson is that the market is way more complex than it seems. The sneeze showed us that. It exposed those vulnerabilities, the influence of social media, the changing role of retail investors, even in a system dominated by those huge institutions. Small actions can have massive consequences.
And it reminds us that even with all our expertise, we're always learning.
Right. The market's always changing.
Who could have predicted something like the GameStop sneeze?
Exactly.
Well, I think we've covered a lot of ground today, from the very beginning to the peak of the sneeze, the controversies, the aftermath.
Yeah, we've really dug deep.
But we always like to leave our listeners with something to think about. So here's a final thought. Did the GameStop sneeze actually bring about positive change? Or did it just expose, deeper flaws in the system?
That's the million-dollar question, isn't it? The answers are complicated. As we try to navigate this crazy financial world, the lessons of the GameStop sneeze, they'll definitely stick with us.
Well, thanks for joining us on this deep dive into the GameStop sneeze. Until next time, stay curious and keep exploring.